Hey everybody, and welcome to Myers Methods Presents Multifamily Missteps. I'm your host, Jerome, and I've got the pleasure of having Jorge Abreu with me today. How are you down in Texas, man?
I'm doing good, man. I'm doing good here in Texas. How you doing?
Amazing. Thanks for asking. Before we jump in, do me a favor and let the listeners know how they can get in contact with you if they like what they hear.
They can go to easiest way is to go to my website, Elevate CIG, Commercial Investment Group is what it stands for. So elevatecig.com. They can also shoot me an email at George or Jorge, it's spelled JORGE at elevatecig.com.
Awesome. So now let's dive into the background, man. How did you get into multifamily, and what have you been working on most recently?
Okay, so how I got into multifamily, I got into real estate investing it's probably about 14 years now, and started with single family at first. Did quite a bit of fix and flips, wholesaling, did some rentals, also did some smaller multifamily. Like we had a couple fourplexes, an eightplex. And then maybe about 3.5 to 4 years ago, I woke up one day and I kind of just looked back at what I had done and what I had built. And I realized to that point it was very transactional. I had also built a construction company, which I chose to do to help me scale the fix and flips in single family. But, other than that, the real estate side of it stayed pretty transactional. And I realized that I wanted to build more wealth, build more cash flow coming in on that side. And that's when I started looking more into multifamily. Ended up getting a coach, and then tried doing single family and multifamily at the same time for a little bit. And then I realized that I wanted to focus on multifamily, and I sold off what I had for single family and went all in on the multi.
So was this all in Texas, like in your backyard, or were you doing stuff out of state? Like, how'd you get into the game?
Yeah, I mean, it started in Texas, and in Dallas is when I started underwriting deals, when I was just learning how to underwrite them. And I think it feels more comfortable for everybody to stay close by, at least at first. And I quickly realized that none of the deals were penciling out. Dallas is a super hot market. And I wasn't willing to pay. I don't know if it's my single family background or what. I wasn't really willing to pay retail for some of these deals, or even above retail is what I felt like was happening. So that's when I started going a little further out and started looking at some secondary markets in Texas, and then landed a couple there, and ended up looking into Oklahoma as well, landed some there. And so yeah, I then came back and finally got one in Dallas, Fort Worth. But if I hadn't done that, I mean, I would have kept struggling. So I think it was pretty crucial to look outside of my own market.
Got it. And so through all those deals, they all went perfect, and you've made a fortune on every one you've done, right?
Yeah, man, it's been so easy. Just sit back and relax.
Yeah. Once you went through the mentorship program, you didn't have to do anything. All right.
Yeah.
All right.
A lot of obstacles, a lot of hurdles, a lot of stuff that you usually don't hear in these type of podcasts. And yeah.
So let's talk about some of the challenges along the way. Like what's been some of the stuff that people don't typically hear about that you've experienced? Because I saw a lot of press. You guys did like an 800 unit deal last year, if I'm not mistaken. So you've been crushing it, but I know that it's not all rainbows and cherries.
Yeah, if you want, we could start with that one. So that one had a unique. I mean, the deal itself was a roller coaster from beginning to end. To get it to close, I think a lot of obstacles came up. The biggest one was a few. No, okay, sorry. There was two big ones. One was we had a pref equity partner, and they had committed. They had given us a formal term sheet. They were all in, and then I want to say it was maybe a month and a half before we were set to close. Um, they just dropped out. We said, you know what, we're out. We got another deal that we want to. I don't know. I don't even remember the excuse, but they weren't tied into the deal, at least not financially. So yeah, they took off. So that was a $10 million check. So we're about a month out of closing and short 10 million. So luckily we had a couple backups. They hadn't committed like 100%, but we knew they were interested. So I mean, for the next week or two, I mean, we were grinding it out, man. Our whole team was just, trying to figure it out and get it done. Luckily, we did. We got somebody else to sign up and to commit to the deal. And at that point, we thought we were good. Everything was all good. And then this was, I want to say like a week before we closed, or maybe even a couple days. The lender's attorney and our pref equity partner's attorney were not coming eye to eye on some of the paperwork and the way the agreements read. Pretty much they didn't want the pref equity can't look like a second lien on the property. It can't be written that way. And some of the terms kind of alluded to that. So the attorneys were battling it out, and I think it was the day before closing they finally agreed, and we closed. But I mean, pretty stressful. I had a full set of hair before. No. But yeah, man. I mean, that's some of the stuff you don't really hear about. But it happens.
So, if you can talk about it, I don't know if you can. What was so challenging about the terms that you had to? There was arguments about whether or not, I guess it was legal, or if you could actually do the equity thing, right?
Yeah, I think the clause where the pref equity partner can step in if certain numbers are not hit is where the issue was, and our lender, not the preferred equity, but our actual lender, didn't like the way it was worded and wanted to make sure pretty much that if we're not making our payments or there's an issue, that the lender can do what they need to do and not and deal with us and not have to deal with somebody else. So I don't remember the exact specifics. I wasn't the main one dealing with it, but something like that, if that makes sense.
I don't know if I want to deal with that one either. So they pull out somebody. Well, first somebody pulled out before that 10 million. You brought other people in. You got a deep network, man. I don't know many people that can raise 10 million for a deal.
Yeah, I mean we've been going hard at looking for those institutional, whatever you want to call them. Someone that can write a check that big.
So is this like family office, or is it more like a hedge fund or private? Like, how do you get It's not a person writing a check, right?
No, no, not this one. This one was just a fund, a private equity fund.
And so I'm always curious about these. So what did you do in order to position yourself to be ready to talk to somebody about writing a single check that big? Because they are really stringent and really particular.
Yeah, yeah, no, you're absolutely right, man. It's all about track record. I mean, you've got to have a strong track record. You've got to go full cycle on several deals and prove the returns that you were able to produce on those and deliver. So Elevate alone, my team alone, we wouldn't be able to do it. So we had a co-GP on that deal that had an extensive track record, and they were backing us up. That's the track record we were using. So without that, forget it. They wouldn't even listen to us.
Okay, so you partnered on the deal, co-GP, and then the combination of you guys went to private equity to bring the big check and to do this
Got it.
deal. What was, well, I guess you don't want to tell that. Maybe you do. Is it in Texas or Oklahoma?
The property or the firm?
Property.
Properties in Texas, yeah.
Okay. I know you guys don't have to disclose buy price, so I won't ask you what the buy was.
No, not in Texas, man. Taxes.
Okay. And so you had your co-GP, you guys got through the deal, finally got that one closed. Is that the only time that you had issues with closing the deal?
No, before that we had so the ones I'm thinking about are, something that you can learn from. So what we learned from this last one with the pref equity was certain things that we do differently moving forward is one, we try to have several backups and like have them ready to go. And two is try to push them to actually put money into the deal, financially, some of the deposit or some of the third-party fees, so they're a little more committed. Easier said than done, but everything is negotiable. So we try to go that route to avoid this happening again.
When they do that, I assume that you've been able to successfully get people into the deal early on. Are they doing it based on their amount of ownership in the deal? Or are you trying to get them to fund all the due diligence to make sure that they're totally committed? Because I went down this path and I knew that they weren't really going to fund when they wouldn't put any money in. So how do you get them across the line?
I mean, ideally, it would be nice percentage wise. You know, honestly, anything's better than nothing. So if let's say we got 500,000 into the deal, if I can get them to put 100,000 of that, I feel a little more comfortable. But at the same time, most of these firms are going to actually ask you for money when when it's time to sign their term sheet or move forward. So there's a lot of negotiating at that point. You've really got to be able to sell your deal and show them, why it's such a good deal. And hey, if you don't want to do this and you don't feel comfortable doing this, that's fine. I'll call so and so, and they're ready to go. If you don't want to provide these returns to your investors, hey, it's okay. But
Take it or leave it, guys.
yeah, you got to find that middle ground, though. At the same time, you're like, please, please, please.
Okay, so you get them in the deal, make sure you got a backup plan. Just out of curiosity, were the terms with the new group better than the terms with the first group that walked away?
Yes, I do want to say yes, a little bit, but
Yeah. I mean, every piece counts at deal that size, right?
most definitely. So as far as another situation, similar in the fact that we were almost set to close, and this was a little earlier on. was we were, I want to say, a few weeks out from closing. And for some reason, this will never happen again, but we hadn't finalized our insurance yet, you know. And when we went to go do that, the insurance was coming back, I want to say double what we had in our pro forma. And it was because there was a ton of losses from the seller in the past 2 or 3 years. There was a couple fires, and then I think water loss and a bunch of stuff. Point is, at the same time, it was also, this is in Oklahoma, and it was a tornado alley kind of area. So the insurance was just coming back at a crazy number, and it was really throwing off our projections and our returns. So we kind of panicked, and I think we reached out to every single insurance agent out there. We realized that the insurance market is a weird place, man. Like I don't know if you know this, but like you can't really have, it's hard to have competition. Like if you have one insurance agent and another insurance agent trying to get you insurance, they're both going to send it to the same carriers or whatever you call it. Yeah. And then one's going to tell you, whoa, we already got this from somebody. And then they're going to come back to you and tell you, oh, you've got another agent working on this. And so point is, after contacting all these agents, we found somebody that was very creative and was able to figure out a way to structure it differently, not to necessarily go to a different insurance company, but just the way the insurance was structured. And he brought it back down to what we had originally projected, and we closed again. But we did realize and learn to get your insurance up front. Like, as soon as you can, get the insurance figured out.
Right. And so from a valuation perspective, if you're okay with sharing, how much of a difference in value would the higher price have impacted the property?
I want to say, see if this makes sense. Yeah, it's about a $200,000 value.
Wow.
And this was a deal we were structuring a little different than your usual syndication, where we try to return all the capital back to the investors on the refi. So that $200,000 is very crucial. You know, we want to make sure we're getting that value so that we can get all the capital back to the investors on the refi. So yeah, man, it almost killed the deal. We were close to walking from it. Actually, the seller ended up helping a little bit too on the price. We got the price discounted because he hadn't disclosed all the claims that he had on the property, and yeah.
So did you ask for the loss runs during due diligence and he didn't send them?
He did, but I think he either missed a couple or missed something like that. But I'm pretty sure this was after due diligence, and he still agreed to discount the price some. Yeah.
Did he miss or did he?
I don't know, man. I don't know. We might have missed it. Like I said, it was early on. But
so people always kind of look at me crazy when I send in the request and say, hey, we want your loss runs for the last 5 years. They're like, what do you want that for? Because of this.
Yeah, no, now we sure do, man. Now we got our checklist and we got our, yeah, we get everything.
Yeah, I mean, 200 grand is kind of a big deal. How many doors was this one?
216.
Oh, well.
So it's not, I mean, you know, still.
I mean, it makes a
I
difference.
may be off on that. I did a $70,000. It might have been more than that. Yeah, I can't remember.
No, I mean, at the end of the day, I mean, it's a couple
I
of.
know it was enough to make a difference. I know when we reran the projections, it was making a difference, and we panicked a little bit.
So, were there any other changes to the due diligence process outside of that? Are there other numbers that you're getting quotes for earlier in the process too?
Taxes, man. Taxes in Texas have been crazy, especially the past few years. So we usually get we work closely with the tax protest company, and we get them to look at it and see what they think um, they can protest the taxes and get, even with the new um, purchase price. And um, yeah, so I mean, the taxes, insurance, those two for sure. Um, I think payroll and anything to do with property management is important to have. Not just use the rule of thumb, but have the property management company you're going to use to actually look at it and tell you what they think.
Okay. And so, what you guys pro forma, and does the property management company give you numbers for insurance too, or is that something that you keep totally outside of them?
Keep it outside.
Okay. We do,
Yeah.
but I know some people rely on the property management company to do everything: mortgage, insurance, taxes, everything.
Nah, man. I think the more you let them focus on the property management, the better. Yeah.
They start getting confused and thinking it's their property. So I get it.
I mean, we don't even let them handle the capex. We obviously I use my construction company to come in and do the capex part of it. We want them solely focusing on property management.
So that part's super interesting for me, and I know we didn't sign up to talk about that, but I'm really curious. So my property management company is able to do the capex for very similar numbers to what we could do with my contracting company. And so, how much are you able to save, or is it really just being able to control the schedule by actually executing the construction management in house?
Um, I know we're saving some, but yeah, you're right. It's not like it's an insane amount of money that we're saving. It's more the fact that the scheduling, the process, the who's actually doing, who the crews are and who's doing the work. Um, uh, just to trust that it's going to get done correctly. It's gonna, we're not going to have any issues. Um, and the management part of it, I've got my project managers that go through extensive training that I 100% trust versus property management's. I mean, I don't know, man. I think some of them even use the same like regional or district manager, whatever you want to call them, to look over the capex as well. I don't know how much construction experience some of them really have.
Very little. The maintenance supervisor's running it all, baby.
Yeah, exactly.
Crews. Probably not the most efficient way to do it for sure. So, final question is, what words of wisdom do you have for the listeners?
Words of wisdom, man. Try to do as much as you can up front. Really, really do your due diligence on every aspect. Try to think of what can go wrong and have a plan B and C lined up. And, when you do run into an obstacle, just be ready to tackle it and go after it. Like, don't feel defeated and don't get in your head, like you've got to be positive and um, to get over some of this stuff.
How dare you say that something's going to go wrong? Everything goes and it's on time, under budget, and everyone
Right.
gets rich every single time.
Of course, man. Of course.
George, I appreciate you sharing with our listeners. I found this really valuable. I haven't talked to anybody so far about loss runs and how that can increase your insurance. And, the other question mark for a lot of people is taxes and what that ends up being, because some people reassess on the trade, others are on this cycle, and you don't really know how much it's going to increase when they reassess. So, especially when you're buying something that's been renovated and repositioned, or you're repositioning it and you're actually pulling permits to tell the city that you're
Right.
because that makes a huge difference in valuation. So definitely appreciate you sharing that. And I wish you more continued success. You guys are making waves, and I really like what I see through social media. And it was great seeing you at Apartment Investing Secrets. So I look forward to continuing to build a relationship, and we'll get to talk soon.
Thank you. Thank you for having me.